you still have outperform ratings on Netflix, Alphabet, Uber, Facebook. Given that the bar is so high, what's going to underperform?
Sure. So, I mean, there's a ranking, right? I mean, we think certain stocks will do better than others. Like within that list, we actually would rank Uber as having the most upside, about 50% to our price target, followed by Netflix at 19, Google at 14, Facebook at 12, and then only 10% upside for Amazon. So, but to answer your Alphabet Google question specifically, you have a catalyst. You have a story there, which is you have Sundar becoming CEO of both Alphabet and Google, and we think that'll take the pressure off kind of the other bets investments and then allow them to take more cash for buybacks. Expectation is they'll have $120 billion of net cash, and they just don't need that much. And so we think for that name specifically, you do have a catalyst for 2020.
Mike Santolia, Apple's market cap is now $1 trillion plus a Disney and enough change to throw in, say, a Workday. And so how does an investor, in a way, avoid that? Not to say that Apple's going to do badly, but it's heavily weighted in the S&P, NASDAQ 100. What are people saying about how you limit your exposure to names like that?
I mean, I think implicitly what the market has decided is not so much that it's exactly those sum of the parts, but that the massive profit base of Apple, it had been the most profitable company in the world, is going to last for longer than we thought a year ago. Honestly, I think it's about the duration of it and not so much about, hey, there's going to be lots of new cool stuff that Apple's going to deliver. But be aware, I think, that people have been buying Apple aggressively for all sorts of reasons that have nothing to do with what's going on at the company. As you said, biggest part of all the indexes. It's happened to be the biggest component of the S&P value index, despite the fact of where it's valued right now. So that might change as they rebalance, but that's a good indication of how you have a lot of people who are kind of just chasing it. Now it's a momentum stock. And very high quality name too, and I think quality and balance sheet have been two things that have worked.
But the earnings keep expanding to deal with the multiple, so we're not dealing with a stupidly overpriced or overhyped multiple at this point for Apple. One reason it still stays in the value camp, essentially.
Well, it's still, but now it's a premium to the S&P, so we'll see if it can still qualify on that basis.
Yeah, Bob, to that point, I mean, this whole idea of value versus growth, we thought we were seeing maybe a rotation in the second half of last year. But then if you look at, again, what has continued to outperform, it is those tech stocks. It is some of those growth names. Is there any reason to think that doesn't change again?
Well, I'm not entirely in that camp. Value did do very well last year. Remember, bank stocks were value stocks in the middle of the year. And beginning in October, they really took off. When we saw yields finally showing signs of bottoming, the curve steepened a little bit. The Fed did do a little bit of liquidity adding. Don't call it QE. Don't get emails. But it changed things. So value moved up. Energy stocks also finally started moving up, another classic value group, particularly as oil moved over $60. There's a lot of people, I think, who are calling for energy stocks to do better just on a mean reversion theory for the 2010s. They were the dramatic underperformer in the last decade, and there tends to be that kind of mean reversion. So I'm not entirely in the camp that everyone will pay anything for growth. I think that there are some elements here of value that can do very well.
Jason, you cover Netflix, we were just talking about. You also cover Roku. That stock did extraordinarily well in 2019, and we've been talking about the streaming wars and how 2020 is a big year to see how that plays out. How is an investor to play that? What are the milestones that they should look for throughout the year to decide whether it's time to buy or sell or what?
Sure. So, I mean, look, when you talk about a momentum stock, that would probably be at the top of the list. Very highly valued, but big opportunity if they're successful. So next week is a Consumer Electronics Show. The company historically puts out metrics around streaming hours and active accounts. And so right now investors are trying to gauge what will be good enough. And then the question is going to be when they start to collect revenue for helping the Disney Plus, the Apple Plus, generate subscribers. And so as you well reported, Disney was incredibly promotional kind of within the fourth quarter, deals with Verizon, a lot of discounts. But after that kind of initial period ends, the Roku's relationships with Amazon become the primary way you generate new subs, and they can exploit that for revenue. So that's what investors should be looking for.